Welcome, traders. It's Glenn, your host. This is going to be Trading Topic Tuesdays. Tonight's topic will be candlesticks. We're going to be talking and dissecting the anatomy of a candlestick, how it's formed, what does it represent, what it's for, how to use the information that's telling you, things of that nature. I prepared a slide for you guys. Before we dive into that, for those who aren't able to make it for tonight live, we are recording it for your sake, so feel free to rewind anytime you want. My partner Reed, he is literally boarding a plane right now, so I'll be doing it solo, no problemo. I got some awesome content for you guys ready to go, right? So pay attention. I know there's probably gonna be distractions at home, right? Try to put in your focus. Like I said, this is going to be recorded, so you feel free to always rewind and write notes. Take notes, which is really good. Okay, and for me personally, that's how I learn a lot, learn best. Take notes, write it down, get it, start learning it, memorizing the information that we're going to be covering tonight. So let's dive in. I'm going to share my screen with you folks. All right, hopefully you guys can see that right here. So we have the candlesticks, all things price formation, candle bars, candles and bars. Just to clarify, candlesticks is just a way to view the price action on a particular chart. There are different versions of looking at the chart, whether it be a line graph, whether it be a bar graph, that I preferably use. Candles is very easy for you to learn and learn and read, easy to learn. So we'll dive in. What is a candlestick? What does it have to do with trading, right? So buying and selling, it creates a transaction, right? Creates a transaction. Through every transaction, there's a buyer and a seller. Anything can be exchanged. Something is exchanged between two parties that can be service or product, right? As long as there is an exchange for services. So like you go to a store, you go purchase groceries, you're exchanging your money for a item, a carton of milk, some eggs, some poke, whatever it may be, right? The exchange is completed when both parties agree on a particular price for that exchange, right? So what I want to do is use an example, something for you guys to easily understand, where we're not just going to dive into trading. I'm trying to break it down, make it real simple for you folks to understand, like, hey, okay, what we are watching with candles is the act of transactions, right? And so I'm going to use, as you can see here, a pack of Pokemon cards. Okay, when I was a youngster, when I was a little kid, I remember I'd save up money for the week, walk my butt to Longs and buy a pack of Pokemon cards for $4. $4 is some change, whatever the change may be, right? And I would be super stoked. And because I was still a small kid, I didn't get a great allowance, right? I was only able to buy me one pack. And so at that time, year 2000, I just did some historical research. Year 2000, it was $4. Now, for a regular, I think it was original pack of Pokemon cards, I looked up last night, eBay, it's going for $600. You know what I mean? So this green bar that you see represents the price action of the pack of Pokemon cards. It represents the Pokemon cards. It could be a commodity, it could be a currency, whatever it may be. For this particular example, we're using Pokemon cards. You can see at the bottom of the green bar, it started at $4. Now it's at 600, and it represents a span of 21 years. So you see 2 points, a bottom and the top, or open and close, right? And it's over, it represents a span of 21 years. Okay. So that's what that green bar is. And so the next slide, we're going to be talking about how the Japanese candlestick, actually the Japanese people, they invented the candlestick. A lot of the commodity traders back in the 70s, 80s were using bars, okay, as a form of representing price on the chart. Okay, so the Japanese candlestick, it was developed around 18th century by a rice trader, Mr. Hama, Munihisa Hama. I'm probably butchering it. All right, so back in the 18th century, so they were trading the rice market, right? How much your rice costs? Oh, my bag rice $5. Or no, yen, 5 yen. Yours is 10. Okay. So this guy, he documented the transactions between the villages or whoever came and traded rice, right? So the rice market became the cornerstone of Japan's economy. In fact, it was the first futures exchange market. That's something I learned. I'm like, wow, cool, man, cool. So the way that they use candlesticks is to analyze and somewhat predict, quote, predict the market, became widespread, refined, and used over 100 years. It was used in Japan 100 years before it came to the West. They were ahead of the game. And so nowadays, in 91, I think Steve Neeson, he made a publication about the Japanese candlestick charting techniques in combination with development of computer technology to verify the analysis. The transaction from bars to candles is quick and fluid in the early 90s. So that's how the kind of the backstory behind the candlesticks, where it came about. Japan was ahead of the game. And so this is what it looks like, a breakdown of a candlestick. We have different things that identifies it. So let's start with the green candle. You see is a bullish candle. You get the high, which is the very top of the bull candle. Right now you have two candles here, the bullish and the bearish, right? Just to clarify between the two, bullish is showing that price is going up. Bearish is price going down. And so the way that the where it comes from, I think from what I saw, was bulls, when they attack with their horns, they start from the like as low as the close to the ground as possible, and then their horns come up, and they, you see those bull riding, running of the bulls. Those guys, they're just you see them flying. The bulls are just going at them and just flicking people off, right? They go up. And the bears, vice versa, when they attack down, okay? Because there's giants, and whatever their prey is, they attack down. Their claws go down, okay? So that's simple where it came from or originated. So we got the high of the bullish candle is the very top right there. They're very, they call it a very skinny piece, okay? Then we got the close of what you see is the bigger, what do you call it, the body of the candle, right? So price starts at the open, and let's just use an example from the way that this is formed, right? Over, let's say, of a 5-minute span, we're watching the price of Pokemon cards. Say it's like the last pack on earth or whatever, and people are gunning for it, right? Black Friday, it's a mess. So the price starts off at $4, right? And then for whatever reason people didn't like it, it trickled its way down to $2, where you see is like a low or a lower shadow, this wick, but price shot back up $600 and it closed there. Okay, that's where you see this bigger body is. The wicks or the upper and lower shadows, price was there at a certain point, but it kind of brushed that area, then it came back. You know what I mean? So it shot up, came back down, and it closed here. So by the end of the 5 minutes, as it is example, that's where price ended up, and that's where the close is. Same, it's opposite for a bearish candle. Price starts at this open, shoots down, right? Pegged in this area, but it got rejected. So then it actually closes here. So vice versa, what you're seeing is just one candle. It can represent 1 minute, 2 minutes, 5 minutes, 15 minutes, an hour, 4 hours, 1 day, 1 week. And it just tells you, it gives you a simple way to analyze price movement. Because imagine you were just given the only other way to analyze price is if you were given every single transaction. You have to go filter out the information yourself, right? So what this candle is doing is taking all that information, putting in this candle, and as traders, we can use that information and not be flustered with a bunch of numbers, right? So price tells a story, right? So let me go back to, okay, so let's go back to Pokemon cards, okay? So I showed you that green bar in the beginning, it represented 21 years. If I was to break down that green bar into 21 candles where each candle represents 1 year of price movement, you would see what you have on the left. And I just drew a simple graph over a span of 20 years. You have on the y-axis $4 at the very beginning, and then 600. And that's what you would see if you were to break down price movement instead of just seeing one big bar that represents 21 years. Excuse me, you get to see 21 different bars. If you zoom in, you're almost like zooming in, right? Each bar represents 1 year, and then on the big green one next to it, you have just that one bar representing 21 years. You know, so it tells you way more on the chart on the left, right? You're able to understand, like, hey, ever since Pokemon came out 20 years ago, it's just been rising. Now you can formulate, or you can do some research on and to understand why, right? This is where fundamentals can come in. You can do some research on why price of Pokemon cards went up, right? It's just been a big it hit the mass market, hit the West. It started, I think, in Japan, then it hit the West, and then big craze came over about the masses, right? Then you got Christmas shopping. All the kids want Pokemon all of a sudden. Movies come out, got apparel, merchandise, all these different things are just driving business to the enterprise that could contribute to why the price came up. Or there could be just less circulation of Pokemon cards in the whole world, because what do little kids do with the Pokemon cards? You trash them, like I was doing that, tear it up, right? So that Charizard, that first edition Charizard, you probably everyone hears about, kids had that and they got jacked up. So now that there's a limited amount, supply and demand, so that's just a little example of, like, hey, price tells a story. It's documented through transactions of a certain market over a certain amount of time. So we got the different formations of candles. Not every candle is the same shape, And so tonight we're going to be going over three types, and this will be you guys' homework. I'm going to be going over, so take notes, right? So we have the Doji here. There's different names for these candle formations, right? As you can see, it just looks like crosses and T's. You're like, what is that, Glenn? What the heck you showing me? Is that crosshairs, right? So going back to what price was doing, we have the high, the close, the open, and the low, right? So imagine that body of the candle, it's fighting, it's moving. And so by the end of the close, it forms these type of formations, which basically is saying price open at $10 and it fought its way up, fought its way down, but it ended at $10, for example. That's what kind of what you would see here, right? And so this is what these dojis will look like on a real chart. You have it circled here. So after the purple line, Reed was able to provide some awesome screenshots of an actual chart in the markets. So you have after a purple line, you have a doji formation. Now, as you can see, these candles were all just being created. You can see it's reflecting price movement, and overall, you can just start to see it's going up, right? The momentum is going up, which you can say that, hey, this screenshot is on the bull move or bull run, whatever you may say. It's on the uptrend. Okay, so because we got lower lows, higher high, high, lower low, higher high, right? Lower lows, higher high. Then you got this doji. You're like, okay, what am I gonna do with this doji? What does that mean? What does that doji mean, right? And you gotta, this is where your analysis comes down, your technical analysis to help understand what's going on in the markets. We're kind of established a sense of direction, right? It's bullish. But what this doji tells you is like, maybe, hey, it's a way for you to enter into the market, take a position in the market, right? Because what it's saying is like, hey, the bears tried to fight it down, but actually just closed, and it stayed at that level of the previous close. So I'm like, okay, you can interpret it. It's all different, right? And you can use that as a signal to get in the market. Because look what happens after. This is the next bars after that doji on the same chart. Doji close, boom, big bar right here, big candle. So if you were long this market and you use that, you notice that doji and you use that as some sort of method to enter a trade, hey, it was a good trade, right? You made some profit. So then we got the engulfing candle, the second candle formation we're gonna be going over tonight. So engulfing candle, what it is, the main characteristic of an engulfing candle is that it shadows the previous candle before it. So you can see that before our big red bar, we had a green bar, and you can see that this thing just towers over, it engulfs over the green bar. And that is also a piece of information you want to use or consider in your trading method, whatever it may be. It can offer you a entry or a signal to exit. Okay, if you were long and you see this big engulfing candle that it's bearish, maybe it's time to get out, right? So it is an example, and this is another following example of the same chart, what happens after this engulfing candle pops up. You can see that the bear candles continue on, and then price pulls back a little bit. So, you know, like the coincidences here, or maybe you use these pieces of information that, hey, yeah, maybe this is a pattern I'm seeing. Once these engulfing or doji candles pop up on the chart and they actually close, I am anticipating for price to do this, just to put it simply, right? So the third type of candle we're going to be going over is the inverted hammer / shooting star, aka high / low test reversal. So many names, like I said, on your candles, and it does represent a certain movement in price. So here's some real life examples that I found in the futures market. So you can see I have it circled here. And what this candle kind of represents is maybe resistance or support for certain movement in the charts. Could be used as pivot points, right? So price was strongly bullish here, and on this candle, it tested really high up here. You can see that long wick, but price closed back down here. The bulls tried to come up, right, as you can see here, but the bears just pushed price down, and we closed lower. And I was like, okay, you can use that as a signal. Maybe it's reversing, right? As you can see, the next two bars did go bearish, right? And then you can see another big, nice test reversal. I forgot to circle this, but right here, another piece of reversal. And price followed suit after. It went bearish. Here's some other, so this is a gold futures. When you have these sideways markets, you kind of tend to see these inverted hammers or reversals or high test, low test candles. You can see right here, price wanted to test down because you had these bigger bearish bars here. Price wanted to try and it got rejected. So it's like, okay, we close that. Boom, long wick. And it could be an entry to go long. Boom, caught couple ticks here. And if that was a small trade that you planned, well done. So you can see that it also displays here, price pivoted, displays here, and the resistance acted as resistance, price shot down. And this is another way of this is where, like, hey, like, you got to use these candles as a piece of information and use it to your discretion, because not all candles, just because you see a perfect formation of the candle, doesn't always mean price is gonna do what you're anticipating it to do. It's just the market. If it was that easy, man, everybody would be wealthy, right? And so you can see, like, hey, we got a strong bounce or test from price wanted to try to go down, but we close higher. And so maybe you're thinking, okay, that could be a sense of support. I'm going to go long. But hey, look, what do you know? Price shot down a little bit more before it did go long. Okay. So the accuracy of these candles, you cannot totally just rely and as using that as your signal. You got to use a combination of a few things or whatever your system may be. So at the end of it, candles are very basic. You shouldn't use it by itself, as I was saying. You need more validation to enter a trade. A candle is a piece of information for you to just consider in your overall system, the way you want to act, how to trade, right? You got to really just go in and understand what you're trying to do in the markets, where the markets are, what conditions, what cycle it's in. Is it in ranging? Is it trending? Is it just not doing anything. You can always configure your chart the any way you want. I like using bars, but we'll stick to candles just to see. So like what I want people you folks to do is use this as homework. Try to find the three candles that I was talking about earlier in a random in any chart that you find, you know. So like boom, here's a doji. Let me go circle this, because this is a form of a good exercise for you everyone to do to start getting some screen time when you guys get a chance. So this would be the hammer, Thor's hammer right there. Let's see, this one's another small doji. This will be an engulfing right here. This would be another form of engulfing, right? And then we could also, what I want to show you too, like I'm going to zoom in to this market. Wait, let me go to, yeah, this one's pretty active. No, not right now. Let's see, Bitcoin, Bitcoin. No, I'll go Euro. So I'm going to zoom in real quick. So I'm on a 1 minute chart and just show you how these candles are formed live. Okay. You know what? Let me go here. Yeah, we'll just use this because so I'm on a 1 minute chart. Each of these candles represent 1 minute. Okay, it opened here, closed here, and you can just see that price. It closed here on this green bar. Now it shot up, opened here, now it's coming down. Price is moving down. So you can just see like how these bars are formed, and during a real trading session, you can, once you start building a muscle of identifying these candles right here, these white ones, that's an easy indicator for dojis right here, these white ones. Boom. And we got the test reversal right here, just circle these guys. So yeah, price is moving right now. So if you were like, oh, you know what, we bounce here, I'm gonna go short. And if you get and you want an engulfing candle here, so let's see where this guy closes. Well, if it closes here, I'm gonna go short. I'm anticipating to come down maybe, and we shall see. Right, this is just on the chart, and we're just watching what price does. But yeah, I mean, we'll see where this guy closes. What's 52? Okay. So we did, oh, see, this wasn't an engulfing. Oh, there you go. Look at that. You got whip out. If it was engulfing, then that could have gave you confirmation for entering a trade short, but we didn't get it. So therefore, we know that the bulls are taking over here. And it would be wise to go long, to buy instead of selling, you know. So yeah, I mean, we have, I'll paste the slide deck on the Mighty Networks. You guys can download it and then refer it, use that to reference for homework for the week. When you guys have a chance, just familiarize yourself with the charts and look for those 3 different candles, and freaking that'll be really good exercise right there. So that was the candlesticks, guys. Candlestick webinars, Trading Topic Tuesday. Thank you guys for watching. Don't forget your homework. Go over your charts, whatever platform you're using right now. And if you don't have one, go lookout.com, tradingview.com. Those are free, easy to use as long as you have internet. And use the charts and look at for those 3 candle formations we went over tonight, and try to just look at it and circle it, whatever you guys got to do to highlight it. Be like, okay, yeah, that's one. That's a doji. That's an engulfing candle. That's a reversal. So it's important you just get the exercise in, get familiar with these different formations, and then you're going to start to see like, oh yeah, that's what that is. So I hope this was really helpful for you guys. This is going to be recorded. Always hit rewind, take notes, pause, rewind, whatever you guys got to do. I know that there's a lot of stuff going on in the home or your office or wherever you may be. So rewatch it, do the homework, try to find at least 2 to 3 charts with these different formations, and then post your screenshots. Take your screenshots, post it in the Mighty Networks. I'm going to create a thread for it in the topic section. So post your screenshots there. And then that way you can just start seeing, okay, yeah, boom, I'm on it. I got it. Repeat, right? Put in the work. So thank you guys for watching, and feel free to DM us for any questions you may have pertaining to this. Have a good one.